Hey, what's going on? And welcome back to Trading Options Network. It is time for our daily training, and boy, do we have a doozy for you. The world is ending! No, it's not. I'm just kidding. The world is not ending. Don't think it is. But that being said, it has been a crazy day. But before we talk about anything, let's go ahead and get this disclaimer out of the way. Everything we discuss is solely my opinion, not the opinion of Trading Options Network. And that being said, with the information, do with it what you will, but take responsibility for your actions. But also be sure to like, follow, or subscribe on your favorite social media platform to stay up to date with everything, including tips of the day, stocks of the day, and so on and so forth. That being said, all right, let's go on and get into it. All right. I actually don't want that one. I want to look at this right now. Let's take a look at what came out this morning. All right, we had the PMI, the manufacturing PMI specifically, that came out this morning. And two things here. One, the actual PMI itself came in I shouldn't say very low, but lower than expected. Okay, we wanted to see a bigger gain from the last reading. The last time it was 46.8. We were expecting a 47.5, it looks like. But as you can see, it only came in as a 47.2, so people were a little bit disappointed. Excuse me. Apparently I'm choking up over it. But that being said, again, people were disappointed, and the market is showing that. But here's where it kind of got a little bit worse, is the manufacturing prices have actually gone up more, quite a bit more. In fact, we were expecting a decrease, and it was an increase. And let me tell you something right now. I guarantee you Powell is not liking that, due to the simple fact that, everybody wants, those rate cuts. And we want to see, we've been seeing a decrease in inflation. There's no doubt about that. But this is something that Powell, even though, according to this, it's only a medium impact, this is something that Powell's going to look at and be like, why are these prices going up? Why are manufacturing prices going up when we're expecting a decrease? Supposedly, inflation is on the down and on a downtrend. Why is this going up? And this could potentially cause an issue with possibly getting a rate cut soon. So we'll see what happens. Sorry, I just had an error pop up on my live feed. I'm hoping that you guys are all here and you're able to hear this. If not, I'm going to have to figure something out. But that being said, let's move on and just hope that you guys can hear me. All right, so here's the heat map. Very, very red. NVIDIA sucks today. In fact, all of the semiconductors suck today. They're just getting absolutely hammered. Technology is getting hammered as a whole. And of course, technology being the biggest sector in the S&P, that's not boding well for the S&P. Industrials is another one. Industrials has been doing well, but they're down pretty high today. Communication services is down a lot today for the most part, with the exception of telecom. But, Google, Meta, and Netflix are obviously all the bigger ones, and they're getting crushed today. So we're seeing a lot of red in the market. Now, one thing I want to point out, if we go ahead and look at the equal weighted ETF here, it's down 1.25%. The actual S&P itself is down just under 2%. So what does that tell you? That obviously tells you that these larger companies are crushing the market more than the smaller companies. Okay, the smaller companies, you could even argue, are actually keeping the market up just a little bit. If it was solely based on these larger companies, I think it's pretty obvious we would be down a lot more than, 1.95%. NVIDIA's down 9%, Apple's about 3%, Google's almost 4%. This is insane. This is a red day. Now, where do we go from here? Well, let's look at this. According to this, oops, didn't mean to grab it there. Let's go ahead and shrink it just a little bit so we can look out. All right, if we look at this, one of my tips of the day was to allow what was previously resistance to become support. And according to the RSP chart, that could be exactly what's happening. So, you know, we broke out over this purple line here. We broke out. Okay, we go back just a little bit more, right where it started at, right here. Okay. We hit it here, failed to break out. Hit it here, failed to break out. We hit it here, we went up, and it looks like it's turning into support. So now the big question, we went a little bit higher. Now the big question is it going to act as a strong support now? Yes or no? We'll obviously find out about that here soon. And by soon, I mean probably the next couple of days, if not today or even tomorrow. But overall, we're still looking good on the RSP. Now, if we look at the S&P, similar situation. Now, we aren't above this breakout line like we are in the RSP. However, here's our resistance line or our trend line. Here's another one that we've been bouncing off of. So we have our resistance and we have our support. Now, we're smack dab in the middle. Now, the 20-day looks like it wants to go ahead and cross over the 50-day, which is actually a bullish sign. But, you know, if it weren't for today, it probably would be looking more like that. In fact, we probably would even see it higher as opposed to roughly at that same spot. In fact, usually this would actually give a number, but I'm not too worried about it right now. But overall, I mean, we're still looking good there. Now, the CCI, this is looking a little bit more bearish. The MACD is definitely looking a little bit more bearish. This day is a very, very bearish candle. But there have been plenty of times where, like, you know, if we look back here, right here, yeah, you know what? The MACD was showing a bear signal here. But what happened? It immediately crossed back over and went up. Same thing over here. It immediately crossed back over and went up. Now, we did have this big drop. And we're right back up to where we were before. So now what happens here? Do we cross and then go right back up? Who knows? Who knows? I don't know. Nobody knows. God only knows. But overall, you cannot say, I mean, here, I can even draw another line here from here to there. There we go. Okay. If we finish below this line, and I mean, obviously I just threw it on there really quick, but that is a decent support line. We still have 39 minutes before the market closes. If this somehow crawls back up and finishes right on this line, and, you know, truth be told, I could even, you know, make it look better. I could even make it look worse. In fact, here, I'll even make it look a little bit worse. Truth be told, that's probably even more accurate. So it is a little bit worse than, you know, what I originally had it at. But the bottom line is we have this line. We definitely drop below the line. There's no doubt about that. But this could be a fake out. It could even be a fake out. I mean, we don't know. One bearish day does not mean we're now in a bear market. It doesn't. It just means it's a bad day. I mean, truth be told, where we're at, I can draw another line. I mean, there's so many lines I could draw on here. In fact, let me just go ahead and do a horizontal line. There we go. Right about there. Okay. Broke right through it, obviously, here. But this looks like it was resistance here. You know, it looked like it was a little bit of support here until it finally gapped down that day. But then we went up, and then it was resistance again. So, I mean, this is definitely a support/resistance line. There's no doubt about that. There's so many different things, so many different ways we can read this. And that, of course, that is what I'm always talking about in regards to trading. Why trading is so difficult, and it's not something that everybody just does. And you can't just pick it up and become a professional trader after a day. You know, days like today, yeah, you might find a couple of people out there in the social media world that made a ton of money today. I guarantee you, if they made a ton of money today, they've lost a ton of money over the last few days when it wasn't moving very often. So, you know, don't worry about that, because chances are they're showing one day after a stretch of bad days. Got to take a sip here of my lovely Monster. All right. So, As I was saying, it's one day, okay? Again, if you follow a lot of people on social media, you may see some people bragging about, oh, I just made, 15, 20% of my portfolio today, yada, yada, yada. Truth is, that's all, smoke and mirrors, because again, they're going to be keeping out a lot of information. Trading is not easy. It's not something you just pick up one day, as I was saying, and become professional. It's going to take a lot of hard work, a lot of studying, a lot of pain, and that's okay. It really is. We're going to learn from this. So where do we go from here? Well, in terms of the market itself, I would say we're going to stay kind of in this same general area for a week or two. As I've been saying, I would not be surprised if we came back up and this diagonal line that I just created becomes maybe like now a new resistance line. What was previously support is now resistance. I mean, it was support here throughout, support down here, and support down here. Maybe now it's going to become a little bit of resistance for, a week or two, but I still feel like we are going to be going mainly sideways for a little while. Maybe inch up just a little bit before the elections, which happen in just over a month. And then after the elections happen, who knows? All hell may break loose. We do have this blue line I haven't mentioned yet, and we could very easily retrace back to that blue line. I just don't see that happening the month before elections. The presidential election, obviously, to be specific, just in case you live under a rock. But overall, this is one of those days where people are going to get trapped. Okay? People are going to get trapped. They think the world is ending. They want to get in at the top. And then ultimately, it just reverses and starts, again, just continues to go sideways at this level, roughly where we have been at for the last couple of weeks. By the way, I'm going to pull up one. Let me just go ahead and open up another screen here. If you are a Platinum member, you would have gotten a notification to open up a trade on Duke. As you can see, Duke is crushing it today. It is completely ignoring the market. And having an awesome day. But again, if you were not a Platinum member, you would not have gotten this notification to open up that position. But Duke is looking very, very good right now. It looks like it may have pulled back here since we started the call, ever so slightly. I'm not worried about that even a little bit because I'm loving this chart right here. Now, Duke does only have monthly expirations when it comes to the options. So we had to do 2 expiration dates from today. So I'm not doing the ones that expire in a few weeks. We're actually doing the October expiration because I don't want Theta to be crushing me if I hold this for a week or two. Okay, if it just continues moving up or starts going sideways but never hits a stop loss or anything, I don't want to start losing because of Theta. So we did October expiration. Theta is going to be a lot smaller. If it starts moving sideways a little bit before another breakout, we're not going to get killed by Theta at all. But overall, I like where it's at. Now, I am going to watch it somewhat closely because I typically do not like to do straight calls, but because it only has monthlies, and not only does it only have monthlies, it only has strike prices at every $5. So we did the 115s. I was looking at the price right now at 116. We did the 115s, 115 calls, I believe. I have to go double check. Let's see if we just go ahead and pull up this. I'm looking at it on my opposite screen. Here we go. I'll pull it over here so you guys can look at what I'm looking at. All right, so, oops. All right. Yes, we did our 115s. That's what I thought. So we're up $650 already today. And by the way, if you're looking at my profit and losses since open at negative 13,000, don't worry about that because obviously if you've been following along from when I started this account, which specifically records every single trade we make. It's a paper trading account, but there's no transfers in or out. This account is specific to all of our trades, and it tracks every single trade. So every single trade I make in my actual account, I'm also making in this account. And that being said, we started at 200,000, and today it is worth, why does not say there? I have to go here maybe. Why? Gosh, man. Thinkorswim is pissing me off. Well, overall profit and losses year to date, it says 30,000. So there you go. Okay, there you go. So we're up nicely in this account. These are just the positions that I have not closed yet, that I have not done what I'm waiting for it to do, but also have not hit a stop loss. Okay, and even though a couple of them are looking bad, GE was a position we actually opened up last week. And again, GE, because of the numbers that came out earlier today, GE killed us today. Absolutely killed us today. Square is actually trying to crawl back a little bit. Tesla's crawling back a little bit today. And there's still plenty of time before those expire, 17 days each. So, if we have a little bit of a continuation, we might see those. But I guarantee this will probably, these positions, unless these absolutely fall off the table, we'll probably go ahead and close these for a loss this week. And again, it happens. I'm not too worried about it. GE, we still have 10 days till expiration. All we want it to do is get towards 180. Yes, it's down a lot today, down to 165. And it's hard because it was at 175 yesterday, or not yesterday, but Friday. It's a big loss. But again, GE could very easily go ahead and come right back. Why did this not? There it goes. All right, that is a brutal, brutal candle. But now we're sitting right on that 50-day. The question is, do we bounce off of that 50-day? Maybe we do, maybe we don't. I don't know. But again, I'm not closing the position yet. Actually, I'm sorry. If you notice, GE, I did actually close 14 of the shorts, okay? Because I do believe that if we get a little bit of a bounce off of this 50-day moving average, I don't want to lose out on some profits on these 175s. So even though, technically speaking, we bought these at $3.85 minus the $1.65, so at $2.20 each. We don't have to actually get all the way up to 220 to just break even. We can actually be under a little bit less, because once these, if it does bounce at all, these are going to start going up as well and count against us. But yeah, so we did actually make an adjustment on GE today. I forgot about that. But again, if you're a platinum subscriber, that text message would have gone out to you right when we did that. And you would have been able to make that adjustment on the GE trade if you so desired. That's what I did. I'm hoping to see a little bit of a bounce off of the 50-day moving average. Of course, again, anything can happen. We'll see what happens. But, time will tell. Time will tell. Let's go ahead and get back to here. All right, so RSP, again, this chart is actually still quite bullish. We're just having a little bit of a pullback today. The S&P is right on. I mean, I don't know what to say. There's so many different lines we can draw here. We have this blue line, this purple line, a couple lines, this horizontal line that I put in, this diagonal line that I put in. There's a ton of resistance. There's a ton of support. Okay, we're right in that area right now where we don't know what's going to happen. If we come back over here, we do have the JOLTS job openings tomorrow. If this number is if this is under the 8.09, I would not be surprised if we gapped up. Same thing with these employment numbers down here on Thursday. And then, of course, we do also have the services PMI on Thursday as well. Now, if the services PMI is a good number, again, we could very easily wind right back up to where we were at the end of last week. So don't let one day discourage you. That's all I could say. Yes, the MACD is looking not good. Yes, today is very bearish. Yes, the CCI is moving on and down. But these are things that are going to have to happen if we want to continue a bull trend. We can't just go up every single day. I mean, if we go back here, There's plenty of days where we had a nasty red candle. Here's one right here. And continue to move up. Here's one right here. There's one right there. There's one right there. I mean, since last November, so almost a year, it's almost a monthly occurrence. Almost a monthly occurrence. We have one nasty day in this trend, and then it completely reverses. In fact, we just had this one right here, which I thought this was signifying. If I could just go ahead and zoom in just a little bit right here. On August 7th, I thought for sure we were going to move down to a new low, possibly down to this 500 level. I thought for sure that was a massive bearish engulfing candle. But what did we do? We just capped up and just shot out of a cannon, and almost touched all-time highs. So again, you just kind of have to take it day by day. Yes, if you are more bullish in your portfolio, today is probably hurting you. If you're more bearish in your portfolio, you're probably loving life right now. But don't let it discourage you, because we are going to have these days. We are going to have these days. It's going to happen. And you just kind of got to roll with those punches. So that being said, I don't really have anything else for you today. I hope you learned something. And I will see you guys tomorrow. Have a good one.